Hello and welcome to the Collective Shift channel. Matt here to share with you the most significant news from the past week in the macro economy as well as the crypto industry. As always, I'll wrap things up with my commentary and opinions on the state of the crypto market and share what I am looking forward to in the weeks to come. Starting with Australia as always, and similar to last week, the biggest macroeconomic news and the focus of the markets, or what was the news that was dictating markets, at least in my opinion and many others' opinions, was the rise and spread of the Omicron variant. So we had, I think the other day, Australia as a nation recording its highest daily cases since the pandemic started, and New South Wales, Australia's most populous state, for about 3 or 4 days in a row now, has recorded its highest ever daily cases of COVID as well. Hospitalization rates aren't as bad as what they were when Delta was really spreading. However, they do continue to rise, at least in New South Wales. There are 302 people in hospital there. And out of those in ICU or intensive care unit, there are 40, which is the highest since November 11. So yeah, it's really, I'll get into this soon in other countries, but at least in Australia, again, like I did last week, I'm trying to keep it from an investor's standpoint and just from a macroeconomic standpoint. I know there's a lot of other ways through which we can assess and talk about COVID, but I'm not a health expert and I don't really want to pretend to be. So with that said, it's definitely, in my opinion, it's really spooking investors at the moment and spooking markets just because of a lot of the unknowns to do with Omicron, to do with, how viral is it? If you do contract it, how serious can Omicron affect your health, both in the short term and long term? So a lot of those unknowns, the market hates uncertainty, and I think that's a reason why we've seen a lot of selling off in the Australian stock market and many others. This week in particular, I think in the US, at least in the US stock market, it was their biggest three-day decrease since September, which again is just a reflection of a lot of uncertainty around this Omicron variant. So yes, the news in and of itself isn't macroeconomic, but I would still interpret this as the biggest macroeconomic news of the week, by quite a distance. I might add, because of just this time of year, there tends to be, a dearth of news to do with, key macroeconomic data, for instance. So this kind of rise of the cases has really taken a lot of the business, the business and economic kind of news headlines, with a lot of market onlookers providing their opinion on how much Omicron is rattling or affecting the markets. And it's almost a self-fulfilling prophecy once you do kind of get that cycle going when there isn't really much else to talk about. So as we can see here, Australia isn't exempt. There's basically majority of countries around the planet are dealing with a rise in cases, and you're really seeing, I guess, governments and health officials tested in terms of, do they continue to, is society continuing to running as per normal without restrictions, or a government's going to have to step in and really impose some lockdowns once again, which unfortunately is right around Christmas time as well, which is a very important time for many families, as we know. So to that end, Netherlands, I think out of the European nations, they were the first one, I think on the weekend, to declare a nationwide lockdown. Now, lockdown is a bit of a blurry word these days. There's so many interpretations of what lockdown means. But that aside, they were the first ones to do that out of Europe. And I think on Monday in UK time, I think the London mayor, he at least declared it a major incident. Not too sure if there have been restrictions imposed in the UK, but they're at least taking this a lot more seriously than they were about a week ago. And then that's reflected in a lot of other countries, I suppose, with travel restrictions as well being imposed in Cyprus, Austria, and France. So yeah, it's a real, as I said, coming up to the holiday season, it's a real unfortunate time where this is all starting to ramp up. And again, from an investor standpoint, it's just really driving the narrative at the moment of really investors, I guess, sentiments and confidence in the economy. So I would, given what I just said about the holiday season, it tends to be quite low volume in terms of trading volume. So you do typically see, even in any other year, you still typically see a lot of volatility around this time just because of lower volumes. And I think that will be the case again this year, particularly when you add in this story and ongoing, I guess, uncertainty to do with the Omicron variant. And just finally, I still think it'll dominate the headlines really because as I said, there isn't much macroeconomic data coming out this time of year. A lot of central banks don't really even meet in January, or at least I know Australia's doesn't. So you won't really see much talk about interest rate decisions or whatnot, which that can sometimes steal a bit of the headline kind of coverage in the media. So I do expect COVID to continue to really dictate where the market is going. So expect volatility over the Christmas and New Year period. And yeah, just because of the time of year, I would also, just like to add that there was a real lack of macroeconomic news. I didn't want to waste your time by trying to cover something and make it seem a lot more important than what I otherwise believed. So it is a bit shorter this week. So with that said, we can move on to the crypto section. And I did want to kick off the crypto section this week with this news in and of itself isn't enormous. I think it is big, but I'll get to it in a bit why I did want to start off with it. So crypto.com here, a big exchange in the crypto space, and they provide a bunch of other services too. They struck a 4-year deal with a women's soccer team in the US, the Angel City Football Club. And the reason why I started off, again, this isn't huge in and of itself. I think it's still big because it's mainstream and it's a non-crypto, it's in the non-crypto world, it's sport. It's just a continuation, wrapping up 2021 with another one of these sorts of deals, where it's been a year like no other in that respect, with crypto kind of, penetrating the mainstream psyche in terms of just their presence in advertising. To be honest, sports partnerships I've been reporting on so many this year, it seems, every other week, talking about what feels like an enormous partnership, and then you zoom out and it's actually been happening all year. So whether that's locally in Australia, with AFL teams, I think 4 teams are now partnered with exchanges, Brisbane, Sydney, Melbourne and Western Bulldogs. And then just internationally with a bunch of soccer or football teams over in Europe, and then NBA teams as well, or basketball, and then college basketball, and then here with the US soccer or US football as well. So again, just picturing the crypto industry without all these deals, and then all of a sudden skip forward 12, 24 months and to today, and now all of a sudden we have a bunch of members of the public who have probably heard about crypto, and then with the effects of advertising, after the 10th, 11th, 12th time of seeing, in this example, crypto.com, they might finally be like, okay, what actually is this thing? What is crypto.com? And more broadly, they might go on to educate themselves about, hey, what is cryptocurrencies? I keep hearing about this. I thought that was happening in 2017 and I thought it went away, but now I'm seeing it when I'm watching sport, when I'm, going to a movie or something and seeing it advertised before the movies. So I think that's the effect. I'm trying to really drive home the significance to you as investors. Again, purely from an investment standpoint, I really want to emphasize how big of a year this was for, crypto kind of becoming more of a mainstream asset class. Okay, here, and speaking of more of a continued kind of news story in 2021, and this one, to be honest, has actually gone back to, this is probably the same sort of news we've had for about 6 years or so now. And what I'm talking about here is the SEC, the Securities and Exchange Commission in the US. They decided to, I guess, postpone their decision on two proposed Bitcoin ETFs. In this example, by Bitwise and by Grayscale. So yeah, more of the same, kicking the can down the road. I think the SEC gets to do that 2 or 3 times when it comes to ETF applications, and then after that they have to either say yes or no. So they typically will keep it right to the last decision. And yeah, this has been the case since about 2014 or so, since the Gemini or the Winklevoss twins submitted an ETF. We did get a Bitcoin ETF approval, or the industry did, about a few months ago. That was a big milestone, but it was ultimately a futures backed Bitcoin ETF, which, isn't ideal for reasons I've explained in previous episodes. So that was a milestone, granted. The industry has progressed in that standpoint, but it would still be, a lot more bullish news and just a lot more promising for the whole asset class if a spot-based Bitcoin ETF was approved, and hopefully that can be next year. Speaking of Bitcoin-backed instruments or financial instruments, had here Austrian investing group Bitpanda. You don't really hear about them much here in Australia, but they are actually an enormous crypto company. Yeah, predominantly based in Europe. I think they provide exchange services, is their main sort of business. And yeah, they announced their very first exchange traded cryptocurrency. So an exchange traded note, or an ETN, for all intents and purposes, it's really just the same thing as an ETF, just something for you to invest in that gives you exposure to, in this case, the price of Bitcoin. So yeah, once again, European markets really seem to be a lot more comfortable accepting these sorts of instruments. And yeah, that's kind of just the continuation of that trend. This year definitely has become a lot more obvious, with the US continuing to knock back ETF applications, or at least most of them, up until the past couple of months, with that one futures ETF being approved, or perhaps 2. On keeping with regulation, promising news here, and encouraging to see the Australian crypto industry or blockchain industry, digital asset industry, whatever you want to call it. Some representatives here from Blockchain Australia, the industry's leading, representative. They did go in, 6 of them, or at least 6 of them here pictured in this image. They went to Canberra to meet with the Commonwealth Treasury on Friday. And as we did see, I think it was in September. September was when the final consultation paper was submitted by the Senate, and I think it was November, when I guess there was more of a, an announcement or a vote of confidence by the acting treasurer, Josh Frydenberg, to basically say, yes, we will accept a bunch of these recommendations. It was the majority of the recommendations from memory, and they committed to reviewing a lot of those recommendations and actually putting in the work in 2022, which was very promising. And before 2022, they've actually already got the ball rolling, it looks like, with getting in a meeting here in Canberra just before the year wraps up. So really promising to see, and I would expect a lot more to come out of Blockchain Australia and just the broader, Australian crypto industry next year and for many years to come. A big reason why the Australian government, or any government really, is, at least, in my opinion, and I think many in the crypto industry would agree, why government should start treating this asset class seriously, and this industry that supports the asset class, is because of the just the amount of sheer talent going into this industry at the moment, and leaving their traditional like tech companies. Sounds a bit strange, but leaving their executive positions at tech companies because they're really, I guess they're really excited and enthused by the promises and value propositions of blockchain technology, and what smart contracts can enable as well. So had this piece here by the New York Times. It is paywalled, so I'm not going to share it here, but it basically just went and really detailed basically the exodus from the tech industry into a lot of crypto companies who have really scaled up their hiring in 2021. And then also that's mainly being driven by so much venture capital just pouring into the space as well, which is something I've really been trying to emphasize this year, because in my opinion, the amount of venture capital coming in is a massive, massive tailwind for the entire industry, and a huge signal that this industry is on the verge of just getting a lot bigger, and a lot more powerful is the wrong phrase. I guess a lot more influential, and I guess a lot more important for politicians to consider and to listen to, because the size of the industry is getting so much bigger, where you can start to see trade bodies and trade associations and industry associations really increasing their memberships like dramatically this year. So you're seeing that a lot in the US particularly, but yeah, many other jurisdictions as well, and such as Australia. So I did just want to wrap things up there by touching on this write-up in the New York Times. Speaking of those bigger sort of crypto companies, and many of whom are very well funded due to just, I guess, being very profitable and or raising so much capital. They all have a lot of war chests now, especially the bigger companies, and you've seen a lot of acquisitions in 2021, and that's something I'll continue to expect to see in 2022 as these bigger companies kind of look to consolidate their market share. In this case, it was Kraken. They acquired a staking platform called Staked, and referred to the deal as one of the largest crypto industry acquisitions to date, and they did not disclose the amount. As I said, it's been a huge year of acquisitions, and Kraken has made quite a few in the past few years. I do remember them acquiring, I'm blanking on the name, the exchange that is now called Kraken Australia. It did used to be probably one of the Australian crypto industry's oldest kind of Bitcoin exchanges, and that was Kraken's kind of way of expanding into Australia, was not by expanding there natively, but they actually purchased and acquired this exchange that I'm blanking on the name. Apologies. But I think Coinbase, you've seen acquire many different companies over the years. I think Bread Wallet was their most recent, but you've also had ones like Earn.com many years ago, which turned into Coinbase Earn. They acquired Bison Trails, a really, really big kind of infrastructure provider. And then you've seen Binance make acquisitions. And again, as I said, just the biggest companies. Why should you care about this as investors? It's not as direct of a link, I think, for market onlookers and people wanting to maybe get hired in this space. It's a lot more important to pay attention to this sort of thing. For investors, it's still important because ultimately you want to have some really, in my opinion, you want to have, a handful of like really, dominant's the wrong word, but I guess really prominent names in the space, so they can then go on to, make connections in Congress with regulators and such, and really, I guess, lead initiatives that a lot of smaller companies couldn't really afford. So you see a lot of education and whatnot by these bigger companies because they can afford to do so. That's just basically more of a narrative that was really prominent in 2021, and saw another one just the other day with Kraken there. And on the complete other side of the spectrum, 2021 has started to be a year where you've actually seen real, I guess, acquisitions, mergers and acquisitions within the crypto native space. So actual, decentralized, or but probably a wrong term there, but crypto projects, crypto protocols, the core teams behind those agreeing to either purchase another either competitor or another similar project with similar goals, maybe to make their teams a lot bigger and to get products shipped a lot quicker. In this case, it was a DAO to DAO merger. So for those of you unaware what DAOs stand for, it's decentralized autonomous organizations. For the sake of this video, I won't really get into explaining what those are, because this is just but it is a weekly macro and crypto news and developments update. So I'll kind of try to limit myself there. But I did just want to touch on these kind of trend of DAO to DAO mergers and acquisitions, because they definitely can they definitely can affect you as investors. In this case, Rari Capital and Fei Protocol have approved a merger. So for those token holders, it's definitely going to be important for them to be paying attention to what happens with their tokens. That's something that I predict will be real specific to every one of these deals. I know earlier this year there was another couple, I think Invest Finance, they purchased like Tonic Finance, which was another two projects with two separate tokens. I think something happened with New Cypher and Keep Project. I think they were going to become something about 6 months ago. I think they were going to become the Keanu DAO. And those two projects both had separate tokens. I don't actually think that, I never saw anything of that actually happening again, because it might have just had to do with the complications of what that deal would look like. And I did just see earlier this week that it looks like they're having another shot at doing it by merging their tech stack and their tokens to something called the Threshold Network. So another example there was XDAI and Gnosis, sorry. They featured a token swap. I think there was maybe Polygon has purchased. I think they purchased Hermes Network, who Hermes Network had a native token. So yeah, you get my point. It's been a growing trend in 2021, and as investors, it's still important to, I guess, be aware of competitor protocols and apps and how big their war chest is of their treasury contract address, because I expect in 2022 a lot of those bigger DeFi protocols with a lot more capital to allocate, they could be really, I guess, preying on smaller projects, especially if we do hit a bear market and there is a lot less, interest in a lot of these apps and protocols. I could see a scenario where a lot of these smaller ones are purchased and bought up by these bigger DeFi protocols. And the native token holders of these bigger ones will be in a position to benefit, in my opinion. Okay, on here to, I'll put Stephen Curry Stephen Curry's been in this report quite a bit lately, but he's in there one more time for the year. We'll get to him soon. I just want to comment here on Elon Musk and Jack Dorsey. You've probably seen them in the headlines in the past 24 hours, 48 hours or so, talking about Web3 and whether it's something that's being, I guess, co-opted by venture capitalists in a really self-interested way to basically just profit off and to dump on for the, I guess, to the disadvantage of retail investors. That really blew up in the past 24, 48 hours. And you're seeing a lot more interest now in, hey, what is this Web3 concept? It is something that, to be honest, I had seen it a lot before, like blockchain technology and all that. I think it has been kind of co-opted by the crypto space. To be honest, a lot like how the word crypto used to mean like cryptology, and it used to, or cryptography rather, And what we now call the crypto space kind of just took that word and made it their own, which is more just a power of numbers kind of thing. And I think that's kind of happened here in the crypto space, which has kind of almost taken the word Web3 and turned it into something that is a bit confusing because people have different definitions of what even is Web3. Again, kind of like DAOs, I won't go into explaining what it is for the sake of this video, but I did just want to share with you that, hey, these are two of the biggest figures in the tech space, going back and forth about, in this example, kind of mocking Web3 and, really poking fun at it, again, kind of because they do fear that venture capitalists are extracting a lot of value from it. But comments on that aside, I really am just trying to focus on why I'm telling you about it as investors. And I'll share this website in the show notes too. I think they did a really quick job of basically summing up what's happened with Jack's relationship with Web3. That was a good laugh. For those listening to a podcast, it's gn.capital. However, why am I telling you this? Why should you even care about it? It's because these things are what really mold the narrative and mold investors' awareness of categories and sectors in crypto. And sometimes individual projects. In this, I really am reluctant to use this example, but Dogecoin is an awesome example, where I guess influential figures in society can really mold people's awareness and I guess grow the whole society's awareness of individual projects. In this case, it's about a category, and this one is Web3. And I just want to show you why I'm even telling you about it, why this Jack Dorsey and Elon Musk news was significant. From an investor's standpoint, I pay attention to it because you can see how much just interest in Web3 kind of kicks off in response to, I guess, major debates or discussions that happen in the public over the last 90 days. It's really been trending up higher, at least on the Australian, for Australian specific Google searches. Web3 is at an all-time high. Their charts are kind of doing interesting things at the moment. Some of them being at all-time high and some of them not, but at least on that chart it is. So again, Web3, I think 2022 from an investor's standpoint, it'll continue to get more awareness and grow in social awareness just because of how much it's being discussed. Yes, something can be discussed and just flop, but when there is actual fundamental tech behind it, which is my opinion, I think that will be an impetus for a lot of people to kind of scratch their own itch a bit and go deeper into finding out what Web3 is. And then you'll see a lot of those layers within the Web3 stack really benefit ultimately, in terms of, I guess, more talent going into their teams, and then also the token prices of their protocols, of the tokens that are native to their protocols, those really going up as well. So with Web3, you've got middleware solutions such as the Graph and Chainlink. You've also got decentralized social media, which I think will have a big year next year, and then will probably continue higher in 2024, just because the tech, it's still a bit early in my opinion, but this is sometimes the best times to be paying attention. Other areas in Web3, you've got storage, so you've got Filecoin, storage, I think it's STORJ. You've got LivePeer is another kind of a video storage one. I think Golem, GOLEM, those sorts of ones that would all benefit from this increase in awareness in Web3. So that's just why I want to mention it in this weekly recap, because it doesn't really get in the headlines, Web3, but especially after this latest incident, I would expect it to start getting on people's radar a lot more as we move into the new year. Alrighty, just on NFTs here. And they are starting to lift up in terms of volume, and I guess Google searches in this case, as seen here on this article by CoinDesk. But I did just want to, I think it's similar to many other cases in the back half of this year where I guess the NFT volume may have been lifting, but overall transactions are actually, down compared to where they were when things were going nuts in about April and March of this year. A big reason for that is just because of how much Bored Apes and CryptoPunks continue to really, attract a lot of volume, or a decent amount of volume. And because they're so expensive these days, they're both over 50 ETH, which is, 50 times 4,000 US dollars. That's just for one of them. That takes up a lot of a dollar figure worth of volume, if you know what I mean. So that's always worth keeping in mind when you are assessing these daily volumes on OpenSea. But it was still worth noting that here in December, it looks like NFT volume, using OpenSea here as a proxy for the entire NFT space, which does have its drawbacks, but it's still a pretty decent measure. It does look like, what are we up to? 22nd of December. So it's definitely on track to pass November, and probably will pass October too, and might even get up towards that $3 billion mark that it hit last time in September. And it's only ever done that in September and August. That is, NFT sales worth more than $3 billion for the entire month. So definitely notable there for NFT to be basically breaking its downtrend and really coming home strong this year. I did want to point out that a lot of that is being driven by just this continued demand for Bored Apes in particular, which are, as I said, 52 ETH each at the moment. And it's really a lot being driven by this anticipated flippening of the floor price of CryptoPunks and Bored Apes. So CryptoPunks, for all of the time that Bored Apes have existed, CryptoPunks have been more expensive than Bored Apes, or at least the floor price has. The floor price, for those of you unaware, is just the price of the cheapest NFT of a given collection. So Bored Ape has 10,000 apes in that collection. The price of the cheapest one out of those 10,000 is what is known as the floor price. So here you've got Bored Apes at 52 ETH and CryptoPunks at 55 ETH. So they are converging. These CryptoPunks have been trending downwards for several months now. And it does look like, for the very first time, Bored Apes are going to actually surpass CryptoPunks and become the most expensive NFT in the world. So that's just I guess a trend that's been happening in this past month or so in particular. I know there are some members in the Collective Shift community who were fortunate enough to buy a Bored Ape earlier this year. A lot of that was kind of driven by Nathan's post in the Collective Shift group, one of our analysts at Collective Shift, who he kind of went through the process of why he wanted to buy a Bored Ape, and he went through the process of how he chose which one he purchased, and then he basically explained that. And a lot of people were fortunate enough to, and clever enough to kind of look into Bored Apes a bit more closely and make that buy decision. So good on everyone, and hope you're all still holding them, because as I've said many other times, people do not appreciate that floor prices aren't the only thing to look at when it comes to NFT investing. I think a massive thing that goes under the radar is all the monetary and non-monetary benefits you get by holding a given NFT. Bored Apes is a perfect example where, yes, you purchased a Bored Ape, and if you've held it for 6 months or whatever, yes, it's appreciated a ton, but you've also been airdropped, which for those of you unaware, airdrop is just gifted, essentially. Think of it as a free gift. They've been airdropped, NFTs that are now worth tens of thousands of US dollars, collectively, if you combine all the NFTs they've received. So yeah, that's just, I wanted to just reiterate that, because I see people get mixed up all the time when they just talk about floor price all the time. Okay, this was probably the biggest news in terms of mainstream adoption in NFTs the last week was Adidas, or Adidas, depending on where you live in the world. They sold more than 22 million in NFTs. I think it was on Saturday, or a Saturday Australian time. So they did have a bit of a hiccup, but that's kind of, par for the course in basically all NFT like drops and mints. At least at this early stage of the asset class. I think there's just so much traffic goes to the website, and the infrastructure of these websites and marketplaces just gets stress tested, to put it one way. So yeah, just to think, hey, 12 months ago, and if you looked ahead to where I sit now, and for me to be saying Adidas launched an NFT collection, and it was, just brought up with so much like fervor and a rush of people like desperately wanting to buy them. I would have thought, you were crazy if you were telling me that 12 months ago, but here we are. And Adidas, as I've been covering in recent episodes, has really been making some strong steps into the industry, into the NFT space, with acquiring some virtual land in the sandbox, and also partnering with Bored Apes as well recently on some sort of initiative. Blanking on what that was. And yeah, there was also a good thread here put together by a Twitter user by the name of Economist. So well done to them for, I guess, really presenting here a deeper dive into how the proceeds from Adidas's token mint were distributed, because, there were people talking about what Adidas was doing with that ETH that they raised, and whether they were just extracting it as a business and basically not really committing to using that capital to kind of further their NFT collection. So I won't go into it in this podcast or in this show at the moment, but I will paste it in the show notes, because I thought it was some good clarity here by Economist, who uses some on-chain data to really clear up the air from a lot of conjecture. At the end of the day, you can't really hide anything on the blockchain, so that's kind of solved, I guess, the end of this, and they've done some good work there. So I want to give them a shout out. Just wrapping up some mainstream adoption news. Got Shaquille O'Neal, NBA icon. He's doing his own NFT drop, I think, in the next 24 hours or so. Anyone who knows Shaq would know he doesn't miss out on an opportunity to collaborate with a product or get his face on something. So I did just want to just mention that there. I won't be buying any, but I'm more just emphasizing it here on this show to basically just, give you this sense of how many types of celebrities and athletes are getting involved in NFTs. Stephen Curry is another one who did a collection the other day, I believe. That was in collaboration with FTX US. And yeah, if you wanted, you could have a look at that collection there. So yeah, just wrapping up a massive year of just celebrity, non-crypto native entities and individuals getting involved in crypto. At the end of the day, this is crypto, and NFTs are now the biggest sector in crypto, at least where we sit at the moment. So it is super important for you to know about as investors, because it has brought so many people into the asset class, whether they know it or whether they don't. Alrighty, here, just onto the markets. And yeah, Bitcoin, Ethereum, and the broader asset class did kind of get caught up in that, continued sell-off in stock markets around the world. I will, for those of you watching the YouTube channel, I will just adjust my screen here. Okay, that's looking good. Yeah, the prices did get caught up in the sell-off. So Bitcoin did drop to, it did go under 50,000. That was earlier in December. And And what did we have here? It was really fighting with that 100, 200 day moving average last time we spoke. And Bitcoin did lose it for a few days towards the end of last week and over the weekend. But notably, over the past 24 hours, it has really put in a strong, solid green candle and has continued and taken that up again, up towards 50,000 in the past 24 hours. So I was watching it earlier, and it was, really did go up in a short amount of time, up towards that 50,000 level, but just fell short of crossing it. So that's what investors will be looking to see whether, that buying up can happen, and whether Bitcoin can, take that 50,000 and run with it in the coming days. In terms of Ethereum, it was much the same story, no surprises there. However, in terms of those moving averages, it's looking a lot more comfortable than Bitcoin. So Ethereum in this case, or Ether, is still above the 100 and 200 day moving average, as opposed to Bitcoin that's only above the 200 day moving average. So for ETH investors, they'd be a lot more comfortable at the moment, relative to Bitcoin investors, because so much, I guess, emphasis gets put on these long-term moving averages, at least by, shorter term investors and medium-term investors. So ETH has gone above 4,000 in the past 24 hours after, really trading in between 3,700, 3,900 over the past 4 or 5 days before that. And yeah, where do I basically see the state of the markets at the moment? I think Checkmate, an on-chain analyst who contributes to the Collective Shift platform about 4 times every week, he had a great post here earlier today, and he's been driving this narrative home over the past few weeks, proving in different ways how Bitcoin holders, the long-term ones, really aren't being rattled by this sell-off that we've had over the past, what is it now, 2 or 3 months or so. And that's really helped Collective Shift members really, I guess, navigate this cycle, or this latest price action. And it's hard not to disagree with him at this stage. He's just proven in so many ways how long-term holders aren't really being affected. And that has really, for me personally, has made me a lot more convicted of not really selling in this latest sell-off, which I wasn't going to do anyway, but I'm at least a lot more confident of not doing so at the moment, thanks to Checkmate's help with these sorts of, industry-leading on-chain analysis, in my opinion. So with that said, I do think, Bitcoin, I don't think Bitcoin has hit its all-time high for this cycle, which did hit later in October this year. I do think it'll take another run up and get towards 100,000 at some stage in the next, call it 4, 5, 6 months or so. I'm not a chartist or a technical analyst, so, I don't want to, it's not my place to really say what exact date that's going to happen. But, my sense, having been in the market quite a while now, is that, this wasn't it in terms of market euphoria and, Bitcoin just having a blow off top higher. So they're just my opinions. I think Bitcoin and ETH are still going to hit all-time highs in this current cycle. And in terms of what happens immediately over the next fortnight, similar, just tying it back to what I said at the start of this episode in terms of the stock market, I think there will be volatility in the next fortnight, mainly because, a lot of traders will, kind of go offline for the next couple of weeks or trade at lower volumes. And as a result, you'll see volumes across the board in crypto assets really fall, just because this time of year is quieter. That's just the reality. So do expect to see volatility, and really, depending on your own investment goals, you might interpret that as maybe a time to buy some crypto assets that you've been eyeing off for a while, or you might just decide to ride this out and just to hold or again, if there's one that you're wanting to sell at the moment or thinking of selling, if there is another strong, rally, that could be a good time to sell. It all really depends on what your own, I guess, investment personal situation is. I did just want to wrap things up by talking about more so some big news in terms of, I guess, altcoins, you could call them, or just alternative chains and alternative blockchains that aren't Ethereum. You saw Terra blockchain, very notably, to wrap things up this year, has surpassed Binance Smart Chain as to become it's the second largest blockchain now in terms of total value locked. Or another way to think about total value locked is just the amount of, I guess, dollar value worth of crypto assets that have been, I guess, sent or transferred to the Terra protocol or the Terra blockchain. So that's what total value locked, or TVL, means. But that's been a massive story to wrap up the past, definitely the last, week or so here in 2021. And Terra has been going on quite a rally in the past 30 or 60 days. I think a big reason for that was, as Kinji pointed out here, I think it was about middle of November, Terra agreed to, basically there was a decision that was made within, I guess, the governance with Luna holders, which is Terra's native token. There was some, I guess, design here or decision that was made. It was something to do with, a massive burning of Luna tokens, burning 1 million or $1 worth of Luna to mint $1 UST. I'm blanking now on what the actual... was a token burning, started on November 10th, and it will continue. Yeah, it continued for a fortnight. And it was a decision to burn a bunch of Luna in Terra's community pool. And the effect that had was that the UST, which is the Terra blockchain's, I guess, most dominant US dollar stablecoin, the supply of that just went astronomical as a result of that burning. And because of that, you saw the market cap of UST really just skyrocket. So much so that I think just early this week, from a momentum of that burning, you saw Terra USD is now actually has surpassed DAI in terms of market cap, which DAI, as we know, is probably the leading decentralized stablecoin in the whole crypto ecosystem. So to see UST, I think at the start, middle of November, it was ranked about 60th in terms of market cap of all crypto assets. And now, as I record this on December 22, it's now ranked 19th. So in my opinion, just that fact alone has kind of had a massive impact on people paying more attention and taking Terra more seriously, because now you've basically got two Terra related assets, that being Luna and UST. Two of them are now occupying the top 20 in terms of market cap rankings. And it's been an impetus for a lot of people to look into Terra because it does have a real burgeoning ecosystem. And like many other blockchains that we've seen this year, the core team behind this blockchain has launched these massive incentivized programs to encourage people to use their whole blockchain ecosystem. And so some real benefactors of that have been the likes of Anchor, Lido, that's kind of, it's multi-chain, but that still nonetheless has been a benefactor, TerraSwap, Astroport, and there's been a bunch of Luna holders or stakers who have received, multiple airdrops as well this year. So I do remember covering Terra for members in March 2020. And I think back then it was about 30 cents. And I do remember that quite clearly when I was kind of writing up and doing an explanation of what Terra was and what Terra was planning to do. And to see it now at $93 is a bit painful to see because I didn't act on that. I do remember being very encouraged and thinking Terra was going to do really good things, but it's kind of a really a symptom, or a symptom's the wrong word, but something that happens when you're working full time in this industry is you just get saturated by the amount of promising projects, and it is very hard to I guess get every single investment right. So this is one of the ones that still does bug me to this day, as from a personal investment standpoint, because it has done about 300x or about 320x, something like that. So if you put in $1,000, that would be I don't know if you put in 1,000, that would be I'm pretty sure it's about $3.2 million. Obviously for people they invested that early, it becomes very, it's easy to say that, but would you have held it the whole time it was going up? You would probably have taken profits along the way, but nonetheless, it still bugs me. I know a lot of members, back when I did report on, they did buy some. So for those of you out there watching or listening, I hope you did continue to hold, because to see Terra really just surge the past 6 months, led by Do Kwon, and it's a big kind of South Korean, has its roots in South Korea, but it had expanded into a lot more Asian countries over the past 12, 24 months. I think they had their Chai wallet. It was a unique thing about Terra, that they had more of a, I guess, their roots in Web2, or like a traditional tech kind of wallet, payments, fintech wallet. And that was unique to them. And to see that idea from now to see where it is now is just remarkable. And I think Terra is a very well-deserved protocol and asset to be in the top 10. So, it's a great way for, many investors out there to be, to see those gains coming into the end of 2021. Just quickly, I probably just want to wrap things up with just commenting. There has been a bit of a resurgence in DeFi in the past week. That's probably been led by the likes of Wi-Fi, or YFI and Curve, CRV. That's more just because, to be honest, DeFi has been belted this year. I think, as I said last week, the likes of Compounds, with like COMP token was down about 80% from its all-time highs of earlier this year. Uni token had been absolutely pummeled. But yeah, you can see DeFi here is up 15% over the past 7 days. So which is, as far as DeFi's 2021 goes, that's probably one of its better weeks, to be honest. And then, as you can see here, the Yearn ecosystem, and Olympus Pro, which is DeFi as well, we're still, right up there over the past 7 days in terms of just performance. But yeah, in terms of the rest of the year, there's nothing really, to be honest, too specific that I'm looking at in terms of massive news coming up, because again, it's a quiet time of the year. Personally, I'm paying attention to gas prices just because, I have been doing a lot more transactions and whatnot, just getting involved in the ecosystem, playing around with ENS, making some swaps on the likes of Genie swap, and all that, which is a lot more affordable, definitely at the gas prices that we have at the moment. Like, these are some of the lowest gas prices I've seen all year, to be honest. So it's nice to be seeing this at the end of the year, a nice Christmas present for you all. And if you have been holding off on doing a lot of things in the Ethereum ecosystem, bridging to Polygon, bridging to Optimism or Arbitrum, or bridging to another blockchain to play around on Avalanche or Binance Smart Chain or something like that, now could be a good time to do it, because you're definitely saving a lot compared to if you did that 2 or 3 months ago. So yeah, I will leave it there. I do have one more ask of you. For those of you watching or listening, we are really ramping up our Twitter content over the past couple of weeks, and definitely looking to do a lot more Twitter content, maybe even some spaces heading into next year. So if you could all give us a follow, that would be much appreciated. You can just go to twitter.com/CSHIFT_IO. That's cshift_io is the Twitter handle. And also a YouTube subscribe would be much appreciated. I haven't really asked for it just yet, but I think, again, heading into 2022, you're definitely would want to be subscribed, because we are going to be ramping up the YouTube content, and all of your support really goes a long way to us at Collective Shift being able to get our name out there and get our opinions out there, and to really help the world learn about crypto and why people care about it so much. So for those of you who did have some thoughts about the channel or about even my videos, I would appreciate a comment below in the YouTube channel. There was one last week by someone who did mention my positioning of the camera relative to the screen, because my face was blocking some of the news articles, so I have adjusted that in response to that feedback, which was very welcome. And that's just a classic example of how we can work together to, I guess, make this channel a real leader in the whole industry. So I'll leave it there. Thank you all for tuning in. I hope you have a very happy and fun Christmas period and holiday period, and to all stay safe out there as well. So thanks for tuning in. See you later.